In this video, I'm going to demonstrate, backed up with results, a simple system which uses RSI and it works on daily charts on dollar yen. Welcome to another video based around technical indicators. I've received quite a lot of positive feedback recently about some other recent videos I've done about using indicators in your strategies. So today I thought I'd continue that theme and show you a strategy that you can use which uses RSI or Relative Strength Index. It uses very simple entry and exit rules, and I've also included a really good improvement which pretty much doubles the profit, so make sure you hang around for the improvements too. I use trading software which allows me to test thousands of my ideas and trading strategies, but I understand most of you don't have access to trading software and you can't program, so that's why me displaying these sorts of strategies, ideas, including the results, can be really quite useful for you. And I know these types of video are useful because not only do some of you tell me, but these are the exact types of video that I was searching for before I learned how to program and test my own ideas. And you'll notice the strategy we're going to look at works off of daily charts, because I also understand that many of you have still got jobs, you've got day jobs, and you can't sit at the computer looking for trades to occur all day long. But most of you can look at the charts once a day. You can look at a daily bar and take those signals. So let's get straight into the strategy rules. I'll take you over there on the whiteboard, I'll display it, then we'll go back to the computer and I'll show you through the test results, and of course I'll show you that improvement. It's a simple improvement, but a bit of a different one, and I think you'll quite like it. This strategy is a mean reversion type strategy, and the principles are quite similar to a Bollinger Band mean reversion strategy that I've recently done, and I'll link that because you'll probably find that video quite useful too. Now, I'm assuming most of you know what RSI is. It's a technical indicator, it's an oscillator that pretty much all charting packages have. So apply it to your daily chart, and it's going to look something like this. It's going to look a little bit neater, a little bit better than that. But essentially, we're going to have two levels. We've got an overbought level and an oversold level. Now, the levels that we're looking at are pretty much the standard levels, 70 and 30. Okay. Now, we can also adjust the length of this. The standard length that RSI comes with is normally 14 periods. I tested this and looked at the different lengths because I've actually created quite a good video using RSI 2, so 2-period RSI for the S&P 500. Now, I looked at it on this one as well, and I found out that most of them work. 6 or 7 works particularly well on the daily. So I chose to use 6. Now, I chose to use 6 because that also gives us more trades. Because we're trading off a daily chart, if we're using the standard 14 period, we don't get many trades in a year, and using 6 we get far more trades, and it's pretty reliable, works pretty well. We're looking at the overbought and the oversold levels. So when the daily bar closes, then what we're looking for is RSI to be greater than 70, and we don't do anything once it's greater. What we do is we wait for RSI to be from above 70 and then come down and close below 70. The minute it crosses down, so it's been above 70 and then it crosses down and closes maybe at 65, that's our entry into the market, and we're going to short sell or we're going to sell if we're already long. And the opposite is true. We're looking for prices or the RSI to be less than 30 and then come above and close just above 30. It might be 32, it might be 40, but the minute the bar closes and RSI is reading above the 30, that's our entry to buy or buy to cover if we're short. It's that simple, okay? So let's go over to the computer now where I'll show you the results and how to improve over the basic strategy. Before we look at the results, I just want to talk about data. Now, I mentioned that I looked to see what the best length of RSI. I said we're going to use RSI 6, and also with the improvement there was a little bit of testing and optimizing there. Now, I did that on data from 2008 through to the end of 2018, and then chose the most robust levels which I thought would continue to work in the future, and then I applied it to data going forward. So then I used 2019 and 2020 data, and pleased to say that the strategy continued to work. So that's what we call using in sample for development, and then looking at the out of sample, the data that we didn't develop on. Okay, all the results that you're going to see the full test. So you're going to see the included 2020 and 2019 data too. So you're going to see that extra 2 years, so a total of 13 years worth of data. Looking at the first development on the screen then, what this one shows is taking all trades using the absolute standard settings of RSI. So we're using an RSI length of 14, we can see here, and we're using those 30 and 70 levels, which don't change. Now, just to see how the trades execute, what we're looking for is, so we start here, we've got a level which is above the overbought level, so it's above 70, and then the minute the bar closes with the RSI below 70, you can see up here, we've got a short trade which is initiated. And then we look for a buy trade, so we close out of the short trade and we go long. So not only do we sell out of the short, but we go long as well when RSI comes below the oversold level, which is 30, and then comes back above, and you can see we've got the buy trade there. Again, it's gone above 70, come back below, we've got the short trade, you see on the chart. We don't get another buy trade then until here, where RSI has dropped below 30 and closed back above. Something that I do feel I should mention here as well. You'll notice on the timeline down below, if I hover, this is the start of 2017 and here's 2018. So we've got almost a year's worth of data there. We only got 3 trades. I mentioned I changed the length of RSI just so that we can have more trades. But look how well that this strategy has caught these moves. We shorted a top there, we bought a bottom there, a top. I suppose we could have bought this bottom here, but it didn't. It caught this bottom here. Now, many people would show you that and say, look, this strategy works really well. I tested it over a whole year and every trade was profitable. And I see so many people and so many videos of people doing this sort of stuff, and it actually irritates me, because by showing just a small sample like that, it's just not enough to assess whether the strategy works over the long run. So let's have a look at now the results over that long period, not just that year of 2017. And we'll do that by looking at the performance report. So here's the equity curve showing those 13 years. This line represents how your account might have grown had you been trading this strategy over the 13 years. And it's pretty awful, isn't it? It's pretty much hasn't made any money. We can see, interestingly enough, this big up leg here, this is that 2017 year where we just saw that made money the whole time. Now within this workspace, I actually done that test where I tested the length of RSI, and I mentioned that 6 and 7 both worked very well. I'm not going to go through and show you all the optimizations in this video. I've done loads of videos showing how I do that. So we're just going to look at the results. Let's move on. And now in this workspace, what this shows is RSI. You can see here, I've got a 6-period RSI, and you'll notice that it trades more frequently. Let's check the performance report, and straight away, look, the equity curve is much, much nicer. That's something that's not too bad. We'll have a look at the total trade analysis. We can see that we've got 144 trades over those years, and we've got an average trade of 55,000 yen, which is equivalent to 55 pips, which is a really quite decent average trade. Notice we've got a largest losing trade of almost 1.8 million yen. That's pretty big, but we can reduce that quite easily later on when we introduce a stop loss. Now we're on to the third workspace. Now, here's where I want to talk about how I improved this strategy. I didn't just improve it by adding a stop loss or changing RSI from 14 to 6. What I did was I actually looked at a thing that I've covered before, which is an idea I gained from Larry Williams, and it's called Trading Day of the Month. Now, imagine that for the first trading day of the month, we named that number 1, second trading day number 2. We don't include weekends, so there can be up to sometimes 24 trading days per month. Now, I decided to look at this strategy and say, are there times of the month where long trades are better, and are there times of the month where short trades are better? And sure enough, there were. Markets do tend to have their behaviour throughout the months. I've actually created full strategies, and I've actually published some strategies where I've created developments all around just literally opening a trade on a particular day of the month and closing it on another. In the stock market, it's pretty well known that towards the end of the month, the stocks tend to rally. That's because some of the fund managers have got to invest their surplus of cash in the market, and that causes a bit of a rally. So I tested, obviously, which are the best days of the month to trade long and which are the best days to trade short. And let's have a look at the results of that now. And I found out that trading long from day 3 through to day 18 and trading short from day 7 through to trading day 18, and notice there was a bit of an overlap there, actually improves things a whole lot. So let's just have a look at the results. We'll see that the average trade has gone up to 111,000 yen now. That's more than doubled from the 55 we were before. We've got an accuracy, we've got a 75% win rate, and let's just have a look at the equity curve. And the equity curve is definitely smoother. It's definitely a nicer looking equity curve. So introducing that trading day of the month filter was definitely an advantage in this strategy. The next thing we're going to look at is where to place a stop loss, and we're also going to have a look at where to put a profit target, because at the moment this is kind of a stop and reverse type strategy. We exit a long trade and get into a short trade and vice versa. But what if we include a profit target? But before we do that, please do me a favour. If you're finding this video useful, please like the video now, because that really helps. And of course, if you haven't already, please subscribe to the channel. In the next workspace, I actually looked at a stop loss just using a fixed pip stop loss, and I ended up choosing 350. It's quite a wide stop loss, but remember, we are taking trades over daily charts. And here's the equity curve showing with the stop loss. It's not much different. You'll notice that we've got more trades, I suppose, because it's been stopped out. The average trade has dropped from 111 to 80,000 now, which is often the case when applying stop loss, especially to mean reversion type strategies. But notice we've got a way smaller losing trade. Now we've got 350,000, which is 350 pip. It's the largest losing trade. And in the final workspace, we looked at what about having a fixed pip profit target. You can see just here we've hit the profit target. Here we've hit the profit target, and I decided to use 200. Actually, there were many different levels that worked, but I actually found that was quite a nice compromise. And if we look at the performance report, so look at the equity curve first, and it's actually a nicer, it's even smoother equity curve, isn't it? This one with the green dots shows all the new highs, if you didn't see that on that one. And let's look at the total trade analysis, and we've got an average trade that's dropped again from 80 down to 53, but it has increased the accuracy. We're 72% accurate now. Let's just go back what the stop loss did with the accuracy. So that introducing the stop loss did reduce the accuracy from 75 to 66, but then with that profit target, we're back up to 72%. And also using that profit target has reduced the drawdown as well. So that's another benefit. But overall, I don't tend to often like using profit targets because you're pretty much guaranteed that your net profit overall is reduced. That's one way you might want to use RSI for a trading strategy. Dollar-yen daily charts. Trading strategies don't have to be complicated, but you just have to find something that works reasonably well and make sure you test it. Obviously, what I've showed you there are backtest results, but they do include out of sample data. Strategies can and do stop working, but I always argue, wouldn't you rather trade something that looks good in a back test? It's more likely to continue working than something that you haven't tested at all, or something that looks bad in a back test. It's unlikely to suddenly start working. And that's what I do. I study the markets, I find things that work reasonably well and put them together in a collection or a portfolio of strategies. So I have many strategies that work pretty well, and overall that makes for a reasonable return over the whole portfolio or trading account. As usual, if you have any questions, please leave them below. Or if you've got any strategies that you might like me to look at and make a video about them, leave them below too. Don't forget to go over to my website, which is thetransparenttrader.com. You'll find lots of good information, videos, blog articles over there. And if you didn't already, please like the video. And until the next video, this is Jared Goodwin, and thank you.